Hello and welcome everyone to another weekly market commentary from StashAway. With us again, of course, our Chief Investment Officer, Freddy Lim.
Hi there.
Hey Freddy, lots to discuss. Markets have been pretty good, so we want to touch on a few subjects today that might have an implication on you, the listener, or in general, the investing public. So stay tuned for that. First of all, we have some very exciting events coming up over the next couple of weeks. On the 11th of November, we are going to be actually coming to Penang in Malaysia. So if you want to find out more about StashAway and learn a bit more about investing basics, you're happy to attend that event. You can find it on our Eventbrite page, our Facebook page, as well as on our website at StashAway.my/academy. So you can find out more about that, and we hope to see everyone there. In Singapore, on the 20th of November, we're going to give a little bit of an education series on how to invest with ETFs. So you learn a lot about ETFs and how you can use them personally to make investment choices and decisions. That's on the 20th of November in Singapore, in the CBD. You can sign up for that as well on our Eventbrite page, Facebook page, as well as on our StashAway Singapore page, stashaway.sg/academy. And you can find out more there as well. So hopefully we'll see you for this one as well. Freddy, lots is happening, right? Markets have been tremendous this year in general, but especially the last 4 weeks, right? It's just been one day, good day after another pretty much in the market. Lots of reasons why, I think. But maybe let's start with last week's Federal Reserve rate cut. I think we talked in the morning, in the evening they did cut rates. What impact did this have?
Well, the Fed cut actually was not the main focus of the whole event. It was more about the forward-looking statement, which they mentioned that they're going to be on hold and to monitor where the economy is. But that's also not the most important thing. The most important thing that uplifted market was the fact that there was a clear signal that is asymmetric. The bar for the Fed to go back to hiking interest rates again is very, very high. They need to see some real increase in prices, real inflation, which we haven't been getting for years. And that's sort of just say like, I'm going to be on hold or I'm going to cut. There's not going to be a hike, regardless of whether the market's done well or not, right? So that sort of removed another layer of uncertainty for markets, and market loves it.
Yeah, and there weren't some weird remarks afterwards, right? So which always helps, which we already had some stumbles, right, in the last year since we've been covering it. Some other political rhetorics, let's take the Fed aside, right? There's a lot going on. We always cover Brexit, we also cover the trade war. Maybe give a little bit of an update on what's happening on the political front. How are they helping also with driving markets to new highs?
There's obviously a lot of attempt to now be more friendly for markets. Well, in summary, we see better behaved politicians recently. They stopped trash talking as much. The tweet storms has not come back again. You still get a few weird stuff on and off. But in general, they are much more measured. There's been a lot of effort to tote the progress in the US-China trade talks. So I think those things are really lifting sentiments. But however, really nothing has really changed. It's just better rhetorics.
Better rhetorics, like President Xi, he went out and said they want to get something done as well, right? They're thinking about where they should be meeting.
But even that, if you read between the lines, President Xi is playing smart and going to support a global trade order and so on and so forth. But what really helped the market was the fact that the People's Bank of China recently, and for the first time since 2016, injected liquidity in the domestic debt markets, reduced the funding rate, the one-year funding rate in China to help tide domestic markets over, because the liquidity pressure were tightening and they took notice and they preemptively eased those liquidity pressure. So those are what's really going on behind the scene. But the rhetorics sort of helps improve sentiments anyway.
No, absolutely. But do you see any specific area that is more positive than it was maybe a few months ago? Different, like maybe, is it Asia, ex-Japan? Is it on the debt side? Is it on the equity side? Anything you see more positive?
I would have to say that it's true. Economic numbers are slightly lagging at the moment, but we have a few pieces of good news in US and also in China last night.
Yeah.
If you look at the US, the conference board leading economic indices is still quite weak. It's about 0.4% year on year,
Yeah.
right? It came off, but the last night the US ISM non-manufacturing data, which essentially proxies growth in the services sector of US,
Yeah.
has came in substantially better than what consensus expectations were.
Yeah.
And it's the first time in a long time that we had such a positive surprise.
Yeah.
The same thing is happening in China, where if you look at the more forward-looking, more accurate data, such as the Li Keqiang index, which uses freight, transportation, electrical usage, and a lot of forward indicators such as credit market, funding, liquidity, it's a much more accurate picture of the Chinese economy for the first time since 2018.
Yeah.
It actually rebounded from the 6% support level. So there's just been a lot of stabilization in the economic numbers. We haven't seen a positive trend reversal. Still premature to call that, but things are slowing. The negativity is slowing down.
And I think people underestimate also the economic, the buying power of the consumer in the US, right?
Yes.
They've come back as well, right? And I think if I just talk to friends, and people, they seem a lot more upbeat and they seem to be spending, right? And I think that could really lift up. This is what you see in the earnings, right?
Earnings not bad too, yeah.
Correct, actually. So this is where you see that people are actually on that level consume
That's
quite
right.
a bit. They don't feel like it's like they're in a pinch,
So
right?
what we have learned so far, right? This year everything did so well, but it's actually the year where we have the maximum negative news flow.
Yeah.
We have maximum political risk. We have all
So
sorts
because
of.
to take this as an example.
This is a great example to say this, that ultimately what really drove a return is economic trends.
Yeah.
And
a lot of people might have been stayed on the sidelines and
Yes,
not
and
invested
this,
because they felt like, oh, it's so bad, the news is going to go so bad. And we
That's
get
right.
also a lot of feedback from people, right, expressing their views,
yeah,
and they completely go with the bad views.
That's right.
And therefore are not able or not easily reaching their goals, right, the long-term goals. And I think now it's a point again where it will flip. They see the numbers at the end of the year when all the magazines, all the newspapers, all the websites say, oh, it's great year for markets, you could have made X%,
And
markets
you missed
up
it.
20%, and you missed it. Now, what should you do? This is the FOMO thing,
and
right?
because you missed it and you now the market at a high and you go and buy in, and what if the market flip down from here? Then you will likely overreact and get emotional again. So the key is not whether the market is up or the market is down, is not to overreact to it. You got to start with why you invest, and that means what's the goal.
Yeah.
Is it a goal to send a kid to university education in 10 to 15 years? Is it retirement in 35 years? The time frame is important. I don't need the money tomorrow, so let's be patient with that money, right? Plant the seed for the tree to grow, and not overreact to tomorrow's news or right up or down, and just stay true with it for the next X number of years in your goals.
Yeah.
So why you invest is very important. All right, the investment planning is important, and not overreact to ups or downs in the market is important.
Yeah, thank you, Freddy. I think this really sums it up on the fear of missing out side, right? It's a really dangerous game to play. Anyways, I hope every one of you this was interesting. As always, please feel free to leave any comments underneath this video or on our page. Happy for you to send us an email at support@stashaway.com as well. Happy to answer any of those. Otherwise, Freddy and myself will be with you again next week, and hope you have a great day. Ciao.